morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lavisha Darad. And after the good start we saw yesterday for the markets, the extension of the same is what the bulls have been hoping for. But for now, the gift Nifty trends have been suggesting a subdued start for the Lal Street. It is also the weekly options expiry day, and some price swings can be observed during the day itself. But going back how the global markets have stacked up, it is quite positive, because if you look at the US markets, they have been on a strong foot overnight. S&P 500 and Nasdaq, both of these indices clocked fresh record highs on the back of two major deals that have been announced. First, AMD shares that jumped by about 24% after it reached a deal with OpenAI where the company will use its chip to power the AI infrastructure. So that came in as good gains from the AMD shares as well. Apart from that, we also had Comerica shares that jumped about 14% after Fifth Third agreed to buy the company in an all-stock deal for about $11 billion. So now this buyout is expected to create the country's 9th largest bank in terms of asset value as well. So two major deals, and that's what has kept the momentum high in the US markets as well. Of course, it was the chip stocks that led the momentum, and that picture was quite similar in the Asian markets as well, where we did see Japan's Nikkei 225 hit another record high for second straight session. Yesterday, we did see the rally that came in Japanese markets after Sanae Takaichi is set to become the Prime Minister, first female Prime Minister of the East Asian country. And today, the chip stocks and the rally in the Wall Street helped further cement the sentiment as well. So, given a strong global setup, we are hoping that Nifty would also react positively to it, and all eyes will be set for the fourth straight day of gains for the Nifty as well. Now, we also have some more business updates coming in from companies. We have Bank of India, Trent, that came out with its pre-quarterly update as well. We'll watch out how those stocks move in today's trading session. We also have the TRI data that came in for the telecom companies. So shares of Bharti Airtel, Vodafone Idea, all of them will be in focus today as well. We'll discuss all of this with our experts, and also don't forget that we'll be also taking your stock related queries. So keep posting them on our live feed and we'll address them shortly as well. Before that, let's quickly take a look at the top headlines, sir. Stocks on Wall Street end overnight session mixed. The S&P 500 and Nasdaq close at record highs, seeing a boost from AMD. The Dow ends more than 60 points lower but recovers from day's low. Asian markets open mixed, tracking Wall Street gains. Nikkei 225 hits record high for second straight session, whereas back home, Gift Nifty is indicating a subdued start for our own markets. Oil prices have gained over 1% after OPEC and allies have agreed to a modest output hike in November, offsetting fears of a supply hike. Gold prices continue to shine, hitting new record highs amid political uncertainties. India's second largest appliance maker, LG Electronics India IPO opens for subscription today. It plans to raise around 11,600 crore rupees through 15% stake sale via its parent company. The IPO is 100% OFS. And US President Donald Trump says that there will be a Gaza deal very soon. Delegations from Israel and Hamas have begun indirect talks in Egypt to close in on this deal. All right, if you look at yesterday's trading session, of course, it was a good start for the day and a good start for the week as well, because we did see Nifty topping that 25,000 mark, and that major booster and the power lifter that came in from the financial stocks as well. Of course, it was the IT stocks also which has been well behaved from the past three sessions, and yesterday we did see TCS gaining about 3% ahead of the IT results as well. The IPO rush, given that yesterday we did see the opening of Tata Capital IPO, and it did receive a good response, about a 40% subscription on the first day. And today we'll be watching out for LG Electronics IPO, which will be opening for its subscription today. Both of the mega IPOs, but however, the sentiment kept intact in the markets despite any short-term fears of liquidity crunch. But yes, like I was talking about the financial stocks, that was a major power lifter yesterday. We did see some good business updates that came in from HDFC Bank and Kotak Mahindra Bank, and of course, brokerages were quite optimistic on the back of their good credit and loan growth that both the companies see. So, So on the back of that, we did see Bank Nifty that gained about 1800 points in the past 5 sessions, of course, and that was also on the back of the RBI policy stimulus. But yes, today we'll be watching out for more business updates. So we'll be watching out for Trent, Bank of India, all of them came out with its pre-quarterly updates. So we'll discuss them in a bit as well. But yes, coming to the cash flows position where the FII stand, they were this net sellers. They sold stocks which was worth about 213 crore rupees in the cash markets, and DIIs they stood as buyers, buying a larger quantum of nearly 5,000 crore rupees in the cash markets as well. Nifty put call ratio jumping to about 1.33 from 1.17 levels from the previous session, and the stock that continues to be a part of the F&O band, that is your RBL Bank. But yes, with that, let's quickly take a look at how the pre-open rates have been stacking up as of now. Both of them have been indicating that we are off to a very quiet start for the markets, marginally higher for both the frontline indices. But with that, how you should position yourself in a trade and environment like this, let's get on board with the technical expert of the show. Joining me is Ajit Mishra of Religare Broking. Ajit, good morning. Yesterday, we did see that Nifty reclaim the 25,000 levels. What are the next levels that we can watch out next?
Yeah, good morning, Lavisha. So yes, we are seeing the continuation of the recovery. Means, Lavisha, a couple of important aspects that I would like to highlight. First, that in the last two occasions, when we were seeing that Nifty was witnessing profit taking from the recent highs, we have made higher lows, and that is more important because though we are seeing broader range consolidation continuing in the index, means 25,400, 600 will continue to be the area where we have multiple resistances. But in the last two occasions, means prior to the recent lows, 25,350, then 25,400, and this time around it was 25,600 from where we saw that market witness a rebound. So it's definitely a positive indication amid all this, challenges that currently we are facing, be it the FIA's continuous outflows and the tariff-related overhangs. Now with the 24,900 was the critical area that we were watching yesterday, where we have the 20 EMA, the first line of resistance that markets surpassed decisively. We have closed around 25,000 mark. So we believe that the tone is positive, and the critical aspect, Lavisha, is the banking and IT. The two key sectors which holds considerable weight in the index, they have started, witnessing traction. Banking, particularly the private banking majors, which were sitting on the sidelines, PSUs were doing well. So off late, we have started seeing traction from Axis, Kotak Bank, HDFC, ICICI. We have also seen a rebound, but it's not very decisive yet. So today being the weekly expiry, we believe that 25,150 could be the area where Nifty might face resistance. And in case if we surpass this level, then 25,250 is something that market may attempt. 25,000 is going to be the key support where the maximum put writing is based at the level. And in case if we slip below this mark, there could be further consolidation after this 3 days of rebound. So tone looks positive. One should continue with buy on dips approach with 24,900 being the key catalyst.
Okay, all right. 24,900 could be the key catalyst as well. And of course, the support area that you have highlighted. But yes, let's also talk about hospital stocks because that did well yesterday. We saw the likes of Max Hospitals and of course Apollo Health, Apollo Hospitals also doing quite well in yesterday's trading session on the back of the government's revision of rates for medical procedures. Ajit, do you expect the stocks to retain its momentum in today's trading session, or was this just a temporary news-based up move?
So, Lavisha, in fact, if you see that most of these names from the healthcare related basket, they have been doing exceptionally well in the last 4-5 months. So yesterday, in fact, it's a added positive that we saw, and some of these stocks like Fortis, wherein we saw sharp gains roughly around 8%, with almost 5 times, 8 times of the average volume. Then we have Max, where we saw rebound, Ester DM, NH. So majority of the counters participated in the move, and the overall trend looks positive to us. So I believe that this, recovery or this positive momentum is here to stay. But yes, one should not get carried away because, after a strong up move, we really see that most of these stocks undergo consolidation phase before the next leg of the up move. So they are gradual, movers. So one should act accordingly. One should not jump into a trade basis the recent price action, accumulate them whenever we see a pause with preference for Astro DM, and Fortis Hospital.
Okay, Astrodium and Fortis hospitals as well. Ajit, let's also talk about Nifty IT index because that was a 1 month high for yesterday, and in the past three sessions also, majority of the IT counters have been well behaved. Given the large quantum of correction, the entire IT pack has witnessed on the back of the global shocks as well. Do you believe that the majority of the overhang from the H1B visa hike news that we saw has been already done, and is this just a pullback that we are witnessing after a large quantum of correction?
So Lavisha, like this is very critical. Means banking and IT put together holds roughly around more than 50% of the weight in the index. So obviously, the sustainability of IT is critical when the other sectors are doing all the liftings. Yesterday it was a decisive session, no doubt about it, but still we are trading below the short-term averages. So that will continue to be the area where we have the immediate resistance. So for Nifty IT index, it lies around roughly around 34,900 mark. So once we surpass it, then probably we can see the extension of this move. Needless to say, the focus is on TCS now with the result scheduled on 9. So obviously the management commentary and the guidance is going to be the key catalyst where how we are heading when it comes to the IT environment. But yes, stability in IT is also good. If they are not witnessing further decline and stabilize around 34,000 mark when it comes to the IT index, it's good for the markets.
Okay, all right. Let's take some stocks in focus also. First, we'll talk about Trent because that came out with its Q2 business update yesterday. Standalone revenue has risen by about 17% on a Y-on-Y basis in the second quarter, and the company has also added about 53 new stores in the September ended quarter. But the brokerages have been quite, not very enthused by this pre-quarterly update. If you look at Morgan Stanley, they've cut their target price to about 58.92 rupees per share. They believe that the revenue growth has decelerated from previous quarters, and the revenue has significantly missed expectations of about 25% growth as well. Ajit, the stock has also been quite negative past couple of months. So far this year, the stock has been down by about 34%. What can we expect the next support areas to be for Trent, and what is the kind of downside can we anticipate?
So Lavisha, it's usual when the company is posting strong set of numbers and then suddenly we see any kind of downward revision. So market is very aggressive when it comes to punishing such stocks. So that is what we are seeing. That trend has been gradually drifting lower. It's been almost a year now that from the record highs of roughly around 8,000 to now we have retraced to roughly 50% from that move. Currently, we are trading below the critical averages on the weekly charts. Around 4,900, we have the 100 EMA placed on the weekly charts, and we are trading below that mark. So definitely, it indicates a negative bias. And in case if we slip below the previous swing low, roughly around 4,500 mark, then probably we can further see the decline towards 4,000 and maybe lower. So as of now, yes, one should refrain from any aggressive long, especially for the short-term trade, and wait for any sign of decisive reversal or close above 4,900 mark at least for a day or two.
Okay, all right. Let's just less than 5 seconds to go. We'll watch out how Trent moves in today's trading session after its pre-quarterly update. And of course, we are hoping that we are open in the green. So first trades coming on your screen. Nifty is open above that 25,100 mark. 0.1% gains coming in for the Nifty, and of course it's a very quiet start for the markets as well. Sensex also slim in the gains, 93 points uptick coming in there as well. Very flat to positive start for the markets. But yesterday also we did see that the markets had opened on a very muted note, but then it had flourished towards the second half of the trading session. Right now we have started off on a flat to positive note, but let's see whether or not the bulls can push up from here on. But yes, Bank Nifty Index also showcasing mild gains at this point of time, extending its gains to the 6th consecutive session as of now. We'll watch out if whether or not these moves sustain throughout the day as well, given it's also the weekly options expiry day for the Nifty contracts. Let's take a look at how the broader markets have been faring at the initial minutes. Both the mid-cap and small-cap indices are up and about. Small cap especially with about 0.3% gain coming in, outperforming from the broader end of the markets, and mid caps showcasing a gain of nearly 0.2%. On the other hand, if we look at the sectoral movers, all in all of them have opened in the green as of now. very mild positive gains for majority of the stock indices, for the sectoral indices as well. But if you look at Nifty IT index from yesterday's trading session, it has opened flat with a positive bias. Nifty auto index have also opened after yesterday's profit booking with a 0.1% gain. Bank Nifty is also seems to be doing well. However, media and private banks, both of them are seeing a little bit of a setback. On the other hand, if you look at the FMCG pocket, that is also showing some good traction, 0.2% gain coming in from there as well. Nifty metals, however, has been shining in today's trading session. After yesterday, we did see some profit booking after 5 days of run-up that the metal stocks had witnessed. So yes, metal stocks have been doing well. 0.3% gains coming in for the Nifty metal index as well. But yes, let's take a look at some of the Nifty gainers and losers. What has been doing well in today's market? Bajaj Finance, one of the top gainers on the Nifty 50, 0.1% gain coming in from there as well. ONGC, SBI Life, some of the other gainers on the Nifty 50, Power Grid, Wipro. We can see some of the other gainers on the Nifty 50. Reliance has been doing well, 0.5% gains coming in there as well. ICICI Bank also showcasing a gain of about 0.5%. Let's take a look at some of the losers on the Nifty 50. Trent seeing a sharp cut of about 2%. Like we were discussing earlier, that brokerages have not been quite optimistic on the counter, and they've not been impressed by its pre-quarterly update as well, where they believe that the revenue has decelerated from the past couple of quarters, and that is what is weighing on the sentiment as well. On the other hand, if you can see Max Healthcare, 1% cut after yesterday's sharp up move, 6% gains came in for the counter, and today we are seeing some profit booking as well. Axis Bank, Shriram Finance also seeing some profit booking, nearly percent cut coming in there as well. Tata Motors and Kotak Mahindra Bank, that also seems to be not doing well at this point of time. But let's take a look at some of the telecom stocks, because we did see a TRI data that came in yesterday. Bharti Airtel seeing it is opened flat with a negative bias as of now. And let's take a look at how Vodafone Idea has been doing, because yesterday we did see a sharp cut for Vodafone Idea on the deferment of the AGR dues case. But yes, if we go by the data, Reliance Jio has led the subscriber additions in the month of August. They have added about 20 lakh users in the month of August, which is up from about 5 lakh users in July. Airtel, his subscriber base has also been up, but if you look at BSNL, that has actually pipped Airtel, and it has retained that second position for the month of August. It has added about 1.4 lakh subscribers in the month of August, and it is one of the best month-on-month growth rate that BSNL has witnessed. However, Vodafone Idea, that continues to lose the customer base in the month of August to about 3.1 lakh for the month. So yes, all in all, Vodafone Idea is also opened with a slight negative bias as well. Ajit, let's come back to you. How do you see these figures coming out for the company? Definitely, BSNL has come out as a top shiner, retaining that second spot after pipping aside Bharti Airtel.
So that's true, and that's the reason why, Lavisha, we always recommend sticking with the top names when it comes to the telecom pack. And Bharti definitely from the listed pack is something which has been showing consistency in the trend. Vodafone Idea for several reasons and news-related updates, we see volatile swings. So the focus should remain on the top-performing names like Bharti Airtel and Reliance being Jio's critical part. So that should be the area where one should be focusing when it comes to the telecom.
Okay, all right. Let's also talk about LTI Mindtree, because that stock has been doing well. We did see that the company had inked pact with a global media and entertainment company that is expected to support the client's digital transformation as well. But the stock has been range bound past couple of months, 5100 to 5200. That is where the stock has been trading at. Ajit, what is the next level that we can watch out for LTI Mindtree?
So that's important because when it comes to the mid-cap IT names, we were seeing volatile swings and in fact profit taking also sharply in the recent past. But LTIM has been consolidating, as you rightly mentioned, in a broader range, roughly around 5,500, 50 on the higher side, and roughly around 4,900, 5,000 on the lower end. So of late, we have seen that it's inching towards its the previous consolidation high. So there could be a bit of a consolidation. Means after the initial up move, we are seeing some profit taking. So around 5,200 mark is something that one can look to accumulate this stock. for upside target of around 5500, 5600, with stop at 5000.
Okay, let's take some viewer queries then. The first query coming in from Anil is asking the view on Fortis. Of course, you did mention, Ajit, about that you're quite positive on Fortis Healthcare as well. What are the levels that you want to highlight here?
Support is after yesterday's move, we are seeing marginal pullback, and which is quite normal. And we believe that 1000 is now the immediate base for this stock. The stock is trading at the record highs, so the upside is open. So with that as a stop loss, one can continue to ride this trend. Once we reach 1100 mark, you can trail your stop loss to 1030, 1050, and keep on trailing your stop loss on every rise.
Okay, all right. Those are the levels that we need to watch out for. Let's take another viewer query then. We have Nana Prakasham has been asking the view on Narayana Hrudula. How does the counter look like right now? Because after the June top, the stock has been on a sliding trajectory. What is the next support level that we can watch out for the counter?
Yes, so it topped out in June around 2350 mark, and after that we have seen a decent retracement towards the long-term averages. After almost a month-long consolidation, we are again seeing buying interest emerging. The stock has reclaimed all the critical averages, so gradually we can anticipate the stock to inch toward 1900, 1950 levels in the near future. So with stop at 1700, one can in fact continue to hold longs in NH and look for fresh buying also.
Okay, all right. Fresh buying also can be seen in the counter. Let's take another viewer query. And then on that note, we have Debu K who's been asking the view on solar industries. What is the next in support levels he's been asking for solar industries? Of course, if you look at from a YTD perspective, the stock has done quite well. However, right now the stock has been consolidating in a range. What would you expect the next levels to be, Ajit?
So, solar after this recent retracement and retesting its long-term averages, now we are again seeing a rebound. But this zone close to around 14,100 is the area basically where we have multiple resistances. So the moment we surpass this level, then probably we can see 15,500, 600 in the near future. So with that, perspective in mind, 13,500 should be your stop loss if you have any existing position. If you're planning any fresh trade, then you should wait for a breakout above 14,100 mark.
Okay, all right. Let's take another stock buzzing, that is your Brigade Enterprises, because that stock has been doing well. We did see the company had inked a pact of about 6.6 acre land parcel in West Chennai as well. But from the June top, the stock has been exhibiting negative trend. What can we expect the next moves to be, Ajit? Can the underperformance continue?
So if you see the reality basket altogether, Lavisha, we have not seen any decisive trend emerging. Means though there were attempts of recovery in past also, but they couldn't sustain. So same hold true for Brigade also. But the good part is that we are very closer to the previous swing lows, and the long-term averages are also placed around 840 mark on the weekly charts. So that gives us comfort that downside is capped. But yes, the recovery is going to be the gradual, means 935, 937 first, and then around 1010, 1020. So we have multiple resistance to cross to reclaim the momentum. So as of now, one can refrain from any fresh long position until we surpass these critical hurdles, because it's likely to remain in a range at least for a month or two.
Okay, likely to remain in a range for a month or two as well. Let's take another viewer query. In that note, we have NP Gandhi is asking the view on Varun Beverages from a long-term horizon. Varun Beverages, of course, the stock has been on a sliding trajectory, Ajit, and it has now taken off that 450 mark as well.
So Varun, disclaimer first that we have recommended to our clients also for long-term investment, and we have a positive view, but its short-term trend definitely looks sideways to negative. Means the stock has slipped below its immediate support around this 475, 480 area, and that's the reason why we are seeing this profit taking continuing. But at the same time, last time around this 440 area and then 410, 420 zone is something that the stock witnessed strong support and rebounded thereafter. So there could be a bit of a consolidation. So short-term trading position is something that you should refrain, but long-term, positions you can continue to hold.
Okay, from a long-term position, you can continue to hold for Varun Beverages then. Let's take another viewer query. On that note, we have Geetu Sandesh who's been asking the view for ITC hotels for a long-term horizon. The stock has been trading, doing well today, 217 rupees. That is where we are at, and it's above its listing price as well. But the stock has fairly been range-bound. Ajit, what can we expect the next levels to be for ITC hotels?
See, the entire sector post the GST cut, everybody was anticipating there could be strong traction. But after the initial up move, we saw that majority of the stocks are witnessing profit taking. But as we are progressing towards the festive season and year-end holidays, there could be an uptick, in months to come. So basis that, plus the stock have already retraced, from its record highs. We are currently trading at the long-term averages. So everything looks conducive for fresh accumulation. The first target area could be around 230 if the view is short-term, and long-term we can anticipate the stock to retest the record highs around 260 again.
Okay, all right. 250 could be the next resistance level for ITC hotels as well. Let's take another viewer query on that note. We have Alex who's been asking the view on Gujarat PPBAV. On how the counter expects to be done. Like, of course, in the last couple of sessions, we have seen that the stock is trying to make a recovery from September lows. The stock has seen a retracement of about 5% itself. Ajit, what can we expect the next levels to be? The stock is attempting a recovery from here on.
Yes, in fact, it seems like accumulation to me because it's been almost 4 months now that stock is maintaining this range 160 to 145, and it's maintaining above all its key averages. So it seems like with uptick in volumes also. So we'll have a confirmation once the stock surpasses 168 mark. So yes, you can continue to hold your longs. You can accumulate further. 155 is the area basically below which our view would negate. So as of now, with 155 as a stop loss, you can continue to stay put.
All right, 155 is a stop loss for the counter as well. Let's take another viewer query. We have Naveen who's been asking the view on HDFC Bank on how the counter looks like from a short to medium term horizon. Of course, we have been discussing about good business updates that came in from the private lender as well. But yes, from a level perspective, what would you expect for HDFC Bank? And of course, he's asking the entry levels as well.
Yeah, so entry level, I would suggest to wait for a break above 980 mark where the call writers are aggressively placed, and we have the previous swing high also around that area. So the moment we will cross 980, then probably we can see the stock inching towards its record highs again, means 1010, 1020 area. Uh, in case if you have existing position also, then you can maintain a stop at 960 on the closing basis. That is 10 points, 12 points down from the current area, because in case if we fail to hold this level, then consolidation might continue in this range of 950 to 980 in the near future.
Okay, all right. Those are the levels that we need to watch out for HDFC Bank. We also have another financial stock query, that is Naveen is asking the view on Bajaj Finance. Of course, the stock has been doing quite well. Yesterday also the stock saw good momentum. Today also the stock has been in green. Ajit, can we expect the momentum to sustain in the upcoming days then?
Yes, Lavisha, in fact, one should continue with this, stock for a medium to long term perspective. Intermediate consolidation, pauses, profit taking is something which is part and parcel of any stock. So the stock is almost trading closer to its record highs. The last three trading session, as you rightly mentioned, we are seeing very strong traction with volume. So everything looks conducive. From short-term point of view, also 980 we believe is the area where we have multiple supports. So with that as a stop loss, one can continue to hold longs. The moment we surpass, let's say 1050, 1150, 1200 is something that stock might test in the near future.
Okay, 1100 is the level that the stock can witness and test as well. Let's take one particular stock that has been buzzing today, that is your Metropolis Health. 3% gains coming in for the counter after we did see some revenue growth of about 26% on a Y-on-Y basis that came in for its pre-quarterly update. Core diagnostics have also moved into break even from Q4 of FY25. But yes, the stock has always entered into a sideways momentum after forming a top in the month of September. Today, the stock is seeing good moves, 3.5% gains coming in for the counter. What can we expect the next levels to be?
So yes, it seems like reversal pattern formation means almost 8-9 months of consolidation. In the recent dip, we managed to hold the long-term averages. So we'll have a confirmation breakout once the stock surpasses 2250 area. So at current levels, also in case if you have in existing longs, 1970 should be your stop loss, and you can add more the moment we see the stock crossing 2250 barrier, because in that case the next swing high could be close to around 2600 or maybe higher.
Okay, all right. That is the view coming in for Metropolis Health as well. Let's take another viewer query. We have Shweta who's been asking the view on Bharat Dynamics. at about, because she's bought the stock at about 1600 rupees. She's asking whether it is good to hold or is it advisable to shift to any other defense stock. What would you recommend, Ajit? Of course, she's bought the stock at a lower levels. We did see a good run up to about 1800 odd levels.
Yes, but of late, in the recent rebound, HAL and BAL, they are doing comparatively better. In fact, Astra Micro is also, witnessing a strong traction. So BDL, it may witness further recovery, but it's underperforming during this, rebound. So I would rather suggest her to switch to BEL or HAL and book this marginal losses and stick to the performers.
Okay, stick to the performers for now. Let's take another viewer query. Shweta has also been asking the view on Indian hotels because she's bought the stock at about 770 levels, and she's asking whether she should add more for the counter or shift to ITC hotels in Lemon Tree. Ajit, you did mention about that the entire hotel pack is expected to benefit after GST rate cuts. But yes, what should she do at this point of time? Is Indian hotels a good bet, or ITC hotels or Lemon Tree? How do they stack up on the charts?
So you see, when it comes to the short-term perspective, Lemon Tree definitely looks upbeat, and Indian Hotel after this retracement means the broadly, if you see that's closer to around 700 is the area basically where we have multiple support. In past also, the stock tested this level multiple times and rebounded thereafter. So after retesting this, there could be a bit of a rebound, but again, since the view is short term, I would rather suggest to stick with the counters where you already have momentum. So Lemon Tree definitely is a good pick.
Okay, Lemon Tree is a better pick then. Let's discuss about one particular stock as well. That is your Bank of India, because that came out with its Q2 business update, where we did see that the global business has surged about by 12% on a Y-on-Y basis. Deposits have been up by about 10%, and gross advances have also been up about by 14% on a Y-on-Y basis for the second quarter of FY26. Let's take a look at how this stock has been performing in today's trading session. Nearly a percent gains coming in for the counter as well. But yes, Ajit, the stock has been doing well today, and in the past 1 month also the stock has been doing quite well. What can we expect the next moves to be?
So Lavisha, within the banking pack, while the banking index was still struggling for any noticeable recovery, the PSUs were witnessing strong traction, and most of the names, including the heavyweight like SBI, have recovered strongly, and we believe that this outperformance might continue in the near future. So yes, you can continue to stay put. 130, where the call writers are aggressively placed, might cap the upside in the near future. But after this recent rebound, consolidation is likely in this range of 124 to 130. So with stop at 120, one can continue to hold the longs. And the moment we, let's say, cross 130 mark, then probably 140, 45 is something the stock can test.
Okay, all right. That's a view coming in for the counter as well. Let's take another viewer query. We have Swaraj who's been asking the view on Interglobe Aviation. Of course, we did see a brokerage note that came in for the counter as well, where Investec has given out a main sell call on the counter, and they expect that the company is set for another weak quarter as well. But yes, from a YTD perspective, however, the stock has been doing quite well. Ajit, what do you make of the brokerage sentiment and, of course, the overhang that is weighing on the counter? 1% uptick, downtick coming in for Interglobe Aviation, and how does the stock look like technically?
So Lavisha, we all know the kind of returns that the stock has posted in past, and yes, of late we were seeing that post the deals or the exit of the previous promoter, where the stock was witnessing a bit of a profit-taking consolidation, but it's not down and out yet. There could be further consolidation in days to come. The moment we dip below 5600 mark, so definitely from the short-term perspective, one should refrain from any fresh long position. In fact, the moment we cross, let's say, 5800 mark, we might again see the stock witnessing fresh traction, or they can reclaim the record highs as well. So yes, for the short term, it's prudent to avoid any fresh long position, and in fact, if you have an existing trade also, you can exit.
Okay. Ajit, I've been receiving plenty of queries on gold and silver ETFs. How do they look like on the charts as of now? Because it's the festive season. How do you see the outlook for both of these metal counters?
So bullion for obvious reason, Lavisha, because if in the last 1 years there was hardly any return when it comes to the equity markets, if we talk about from the index perspective, so that definitely bullions have done exceptionally well, and still there is no sign of slowing down. So gold is currently quoting around $4,000, and silver also we are currently quoting at 49, 48, $40. So this seems like there could be a bit of a consolidation after this phenomenal surge. So again, in case if you're planning any fresh investment, uh, you should be like doing it in a staggered manner through SIP route instead of buying at one go. Because after this phenomenal move, there should be some consolidation or a pause before we inch further upward.
Okay, all right. All right, just one last question before we let you go, Ajit. What are your top picks at this far? We have earnings season which is upon us, but anything that you're finding interesting ahead of the Q2 results?
Yes, so in fact, Lavisha, the PSU basket means be it banking, OMCs, defense, they all are buzzing. And from the OMC space, IOC is something that I would like to recommend, considering that stock has reclaimed its previous swing high. It's a consolidation range breakout also. So with stop at 148, one can look to accumulate IOC at current levels with 166 as a stop loss. Another name from the banking basket, PSU banking basket, SBI is something that one can look to accumulate. We are seeing consolidation around the record highs area, and probably like after a day or two consolidation, we might again see the resumption of the trend. So with 845 as a stop loss, one can accumulate SBI at current levels with 935 as a target.
Okay, okay, all right. All right, this is stocks that we need to watch out for. But with that, we have to let you go, Ajit. Thank you so much for your time and connecting with us.
Thank you, Lavisha.
All right, let's take a quick check of the markets. How are we stacking up right now? Because we did open with a marginal set of gains, and Nifty is still holding on above that 100 mark as well. Sectorally, it has been a day for the banking stocks once again as well. Marginally higher, however, at this point of time. And metal stocks has been doing quite well after yesterday's profit booking, nearly a percent gains coming in there from the metal counters. On the other hand, if you look at the IT stocks that have taken a profit booking, they're seeing once again they're down by about 0.3% ahead of its Q2 results that the TCS will be reporting from Thursday as well. On the other hand, if you look at auto stocks, they have been mildly in the green. FMCG has also taken a little bit of a setback. Pharma with about 0.1% gains. And if you look at the PSU banks, that has seen a little bit of a profit booking at this point of time. But yes, before we move on to our next guest of the show, let me introduce you to Moneycontrol's Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI-registered experts, pre-identified chart patterns, and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So Super Pro is where all the serious investors should be, and you can download the Moneycontrol app and subscribe to Super Pro today itself. All right, with that, let's quickly move on to our next guest of the show. We have Sneha Podar, Vice President Research of Wealth Management of Motilal Oswal Financial, joining us. Sneha, good morning.
Good morning.
Sneha, I was going through the latest report by you guys, and you have mentioned that while Q2 is expected to remain subdued with single-digit growth, Q3 and Q4 could see some double-digit earnings growth. Does this mean that Q2 will also mark the end of any earnings downgrades that we are about to see?
Okay, so basically, as you rightly mentioned, what we are anticipating is that Q2 will mark the bottoming out of the earnings downgrade. So basically, anyways, in Q1, what we saw was the earnings upgrades were a little higher than compared to earning downgrades, and even in Q2, that trajectory will continue. So, and largely this will be more in the broader market, wherein the downgrades will be very less compared to the upgrades that we can expect. And from H2 onwards, we are expecting the earnings recovery to start. very important to watch out this quarter will be because numbers are largely kind of like factored in that the numbers will be weak in Q2. But what is really important to watch out will be the management commentary, because with the GST benefit already kicked in from the 22nd of September. So obviously last 1 week was very crucial in terms of the sales momentum pickup that we saw in majority of the consumer names. So in those cases, the commentary will be very important as to what is the kind of outlook we are getting for the Q3. And that is from the consumer point of view, and from the industrials and the cap goods point of view, the pickup in capex becomes really important. Government has already done its part. It already preloaded the capex at the start of FY26, and they are already committed to again kickstart the investment with the monsoon now almost getting over. So what is really important is the private capex, which should pick up, which will actually set the ball rolling. So the consumer demand is expected to pick up. Now it's on the industrial side that the demand has to pick up, which will be spurred by the private capex. So the commentaries on both these sides will be the real key thing to watch out during this Q2 numbers.
Okay. Sneha, like you talked about the consumption theme doing well on the back of the GST rate cuts. The consensus on the street has also been quite optimistic over the discretionary items, that more luxury items would do well instead of the basic essentials. And that's a vote of confidence in terms of growth. So how do you expect the next few months to pan out for the markets? And how would you suggest investors to play out this consumption theme?
Okay, so we are more optimistic on the discretionary consumption rather than the staple consumption, because in terms of discretionary consumption, somehow the growth had moderated. People had gone on a back foot, but now with the GST having a major impact, with the price getting reduced by almost 8 to 10%. So obviously the and with the the festive season setting in, so obviously the discretionary demand will pick up. The rural demand will be supported by the good monsoon that we've seen. So it's only except for few pockets which saw drastic rainfall. Otherwise, the spread was pretty decent across the country. So the rural demand, which already saw green shoots over the last a few quarters, that will get further strengthened. And now with the GST cut implementation, the urban demand is also expected to pick up, which we saw in the the first week of its implementation. So definitely the overall consumer sector, which was languishing for last 2 years almost, we can expect some sort of some sort of momentum in them, and this will be also supported by the bedding raw material prices, which will provide some comfort to the overall operating margin. But having said all this, the global cues will be very important to watch out for, because still the uncertainty with regards to the US tariff continues to hover. So that will that will dampen the sentiment from time to time. So while we are optimistic about the overall consumer discretionary space, and that too because it's a complete domestic, largely a domestic play, but still the global uncertainties will keep the market in a range-bound movement.
Okay, all right. Some range-bound movement can be expected. Sneha, let's also talk about IT earnings, because that is starting this week, and positive earnings visibility is not just a problem for this year as well amidst this whole tariff and visa hike news. But if you look at the demand side scenario, that has been quite weak from the past 2 years for the entire IT sector as well. So do you believe that this is the pocket that investors should stay away from the time being, or how would you suggest to play out for the entire technology sector?
See, from the short-term perspective, one should continue to stay away because still, as I said, the uncertainty is there with regards to US tariff. Moreover, given that the tariffs the Donald Trump has implemented on various countries, so definitely the inflation is set to rise in US, and the overall, overall US economy is, the growth is a big question mark. So unless and until the growth in US market picks up and the inflation comes under control, the deals the deal announcements will be quite muted, and even if the deal announcements happen, because that too will happen largely on the cost optimization part and not on the discretionary part, but even if it happens, still the conversion from the deal to revenue will be very, very muted. So from the short term perspective, we really don't expect anything major to happen in the IT sector, and even the Q2 numbers we're expecting largely a very muted kind of quarter. But having said this, from the long term perspective, the prospects are good from the for the IT industry, but one has to really play it from the 2 to 3 year perspective. One can start accumulating because the valuations are very reasonable. So the valuations provide a lot of comfort, so one can probably accumulate in a staggered manner, but definitely to avoid in the near term perspective.
Okay. Avoid for the near-term perspective. But Sneha, how would you see the global AI theme to play out for the entire Indian IT sector? Because if you look at the global markets, in the US markets, majority of the tech stocks have been doing quite well. AI stocks have been doing quite well. But Indian IT is still lagging in terms of that. So how would you actually juxtapose that, in the next 2 to 3 years, we can see some outperformance for the Indian IT?
See, basically in India, as such, we really don't have any major player in the AI space. So, the majority of the companies, they have announced some sort of foray into AI through some partnership. Through some partnership deals and all, but still, no as such pure play IT companies there in India with regards to AI. So that is one of the major reason why we are not seeing. I mean, while the global IT companies who are focused on AI are witnessing sharp rally, but the Indian companies are not witnessing that kind of move because the AI contribution probably is just as single digit. In fact, that would be a low single digit contribution for the majority of the companies.
Okay. Now that we discussed about consumption and IT themes as well, let's talk more about sectors. Where are you more bullish on? Where is something that you find good growth visibility, and valuations have also been quite comfortable?
Okay. See, NBFC is one sector wherein valuation is very comfortable. In fact, the NBFC and the banking space. So there, if you look at the price to book would be about like in case of banking, it would be 1x, or in fact, in case of PSU banks, it's even less than 1x. While for NBFCs, it would be anywhere between 1 to 2x. So the valuations are pretty attractive. And if we look at the how they would benefit is that with the consumption demand picking up in the overall the advances for the banks and NBFCs will see an improvement, and if the capex also picks up, then on the corporate side, on the infrastructure lending side also, we'll see some momentum kicking in. Moreover, with the RBI rate cuts that were initiated, that will provide. So in the last 2 3 quarters, because of the rate cuts, we did saw some NIM pressure, but now that will bottom out by this Q2 quarter, and then from the Q3 quarters, the real benefit of the lower credit cost will kick in, and thus we will see the improvement in the NIMs for the majority of the NBFCs and the banking space. So with the margins improving and with the overall credit growth picking up, which had fallen to almost 9 to 10%. So in H2, with the credit advances picking up, obviously, and this sector looks really good from the at least a medium term perspective, because the asset quality continues to remain pretty healthy, while the slippages continue to further moderate out. So one should really from the value picking perspective, one can look at this space. Another space which we are really positive is the value retail companies such as Vishal, Megamart, VMart kind of companies, wherein the business updates that has come out for Q2, I mean, they continue to be absolutely stellar. So it's been a past few quarters, and quarter after quarter, we've seen very good set of numbers, and these companies are largely benefiting from the shift which is happening from the unorganized to the organized. So with more and more rising aspirations for the private labels in the tier 3, tier 4 cities, I mean, this is clearly reflecting in the numbers. So despite aggressive expansion plans, store expansion plans, these companies are able to very quickly turn around the stores, and they're witnessing very strong same-store sales growth. So these two space we are really bullish upon.
Okay, value retail and NBFCs. Incidentally, let me also bring your back focus to your model portfolio, where you have turned underweight to cement counters. But from an earnings perspective, the expectations are quite high for this quarter as well. So, what made you more conservative on this particular sector? Was it the valuations and the stock run up that the majority of the cement companies have already seen, or what is it?
Okay, so it's largely the run-up that we've already seen in the sector. So the valuations have become a little stretched, and given that we are still waiting for the demand to pick up. So I mean, the entire Q2, if you see, largely normally these companies cut down on the prices, but the prices held steady, and now post the GST cut implementation, the price cuts have been implemented. So while Q2 numbers are expected to be very strong, but then we'll see some sort of pressure in the Q3 numbers, which would be a near-term kind of pressure. Obviously, in the long run, I mean, eventually, once the demand picks up, the improvement in the earnings will start picking up. But we are not really anticipating a strong pickup in demand in Q3. That has made us a little cautious on the cement side. So it's purely from the short-term perspective that we've turned underweight on this sector.
Okay, all right. Let's also talk about new age tech stocks because we did see some good business update that came in from Nykaa. Delivery has also been doing quite well. So how would you see the outlook going ahead for the upcoming quarters for the entire new age businesses pack?
See, we're very positive on the new age pack. So, in fact, we really like delivery, Eternal, Swiggy, and Paytm. These are we have coverage on these stocks, and we are very positive on them. So, with regards to delivery, if you talk about, so delivery is largely a play on the e-commerce theme, and with more and more rising penetration of e-commerce, especially in the the smaller towns, because e-commerce has so far the major penetration has been seen in tier 1, tier 2 cities, but tier 3, tier 4 cities still a lot of work needs to be done. So delivery already has a strong pan India network, but with rising e-commerce penetration in tier 3, tier 4 cities, obviously it will have the first mover advantage to tap into it. So there's a lot of scope for the company to expand its reach and to expand the overall the revenue base for the company, because in e-commerce, if you see, they have about 30-40% kind of market share, so that actually gives them the first mover advantage. So it makes us really positive on delivery from a near term as well as long term perspective. Quick commerce space, if we talk about, we really like Eternal and Swiggy. So the competition has a kind of now kind of got restricted to 4-5 players. So the what we believe is that the market size is too big, and it can absorb all these 4-5 players which are there. So food delivery business, it's a duopoly. So these two players have kind of stabilized the business, and now it has become a cash cow for them. So it's a steady kind of a revenue which is coming from there. It's a quick commerce business which was kind of putting strain on their balance sheet, but now we believe that with the market restricting to 4-5 players, so the market size can actually absorb these 4-5 players. There's a lot of potential, a lot of work that needs to be done in the smaller cities, because Swiggy and Zomato reach has only been restricted to metros and tier 1 cities so far. So there, a lot of potential is there. And what they've done is now they are kind of going slow on the dark store expansion. Whatever aggressive capex that they've done over last 3 to 4 years, now they want to at least stabilize on those stores, and then turn them profitable, and then move on to the next phase of expansion. So it's a good call that these companies have taken, and we believe that they would actually turn around the quick commerce business over next 1 year. At least at the EBITDA level, it will turn profitable, and then gradually over next 2 to 3 years, at the consolidated PAT level, these companies will turn profitable. So that makes us positive on this space. And even Paytm we believe is a very good bet on the overall UPI banking side. Whatever regulatory hurdles that the company was facing, that has been removed for the company, and that will actually opens the door for the next leg of growth. And even the company has learned its lessons through various experiments that it had done and burned its hand with, but now it has realized its mistakes, and it's taking a very calibrated kind of step going ahead. So that makes us really positive on its business prospects. So these 4 companies we are really bullish upon from the new age space.
Okay. All right. Sneha, now that we also discussed about IT and of course the cement stocks where you have maintained a conservative stance, anything else that you want to highlight where you're still a little bit cautious and remaining on the sidelines for the time being?
See, we are a little cautious on the pharma side. So, because the tariff uncertainty still continues, and there's not much of clarity how things will pan out. So, though from the long-term perspective, we are very bullish on the overall CDMO space, but and the overall hospital space. But from the near-term perspective, somehow the pharma space. We believe that it will continue to remain sideways till the clarity emerges, because majority of the companies have got some or the other exposure to the US market. So though with the recent pharma announcement, it was believed that none of the pharma companies as such, except for Sun Pharma, has got a direct presence in the specialty pharma space. But then still, the market is not really very clear and confident with regards to the sector, and thus we believe one should in the near term should remain on the sideways till we get the clear cut picture emerges. But from the long term perspective, definitely this space, especially the CDMO space, looks very promising.
Okay, all right. Pharma is the space where you're a little bit cautious as well. Of course, the entire export-oriented sector is where the street consensus has been on the sidelines. But yes, with that note, we have to let you go, Sneha. Thank you so much for your time and connecting with us.
Thank you.
All right, let's take a quick check of the markets of how we are stacking up right now. If you look at Nifty has extended the gains. 25,150 market still holding, but right now we are up about with a 100 points gain and 0.4% gains that is coming in for the Nifty as well. Let's take a look at how Sensex has been stacking up. Sensex has also extended gains, 300 points gain coming in for the Sensex as well. Yesterday also we did see that the markets did pick up pace in the second half of the trading session, and right now also we are seeing a good momentum so far as well. The broader end of the markets, they continue to remain resilient, outperforming the benchmark indices. Auto stocks have been in the fast lane, 0.3% gains coming in from there. IT stocks have also once again flipped into the positive territory after seeing a little bit of a slide in the early part of the session. Pharma stocks, like we were talking about earlier, 0.1% gains coming in from there as well. And definitely it is the day for the metal stocks because that has been performing quite well. 0.5% gains coming in there from the metal index. And Nifty Realty also seems to be doing well with about 0.4% gains as of now. But yes, before that, let me introduce you once again to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls and investment ideas from SEBI-registered experts, pre-identified chart patterns and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So you can download the Moneycontrol app today itself and subscribe to Super Pro to get all the alerts on your WhatsApp. Alright, with that we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 for closing, and we will be discussing about how the market is developed with our experts and also discuss the stocks that did grab the headline. But for now, start signing off and stay tuned to moneycontrol.com.